Hello and welcome to the 2025 Clients Only Update for Black Point Insurance. My name is Erin Ackenheil. I am your agent for your Medicare plans, and I'm happy to bring this update to you for 2025. And this is really an update based on earlier information provided earlier during open enrollment about all the changes coming up for Medicare for next year. So this is meant to be a highlight reel and update for what we already learned and other really important information going into next year to make sure you get the most out of your plan benefits. Again, my name is Erin Ackenheil. I'm the owner of Black Point Insurance. I'm your agent, and I'm so grateful for all of you sticking with me and being with me year after year. And hopefully, you're enjoying the level of service that we're able to provide. What you'll see here is our team email, reservations@blackpointinsurance.com. This is 100% the best way to reach me and my team. We share that mailbox as a group, and there's always somebody monitoring that to make sure your needs are met. And there you see our office phone number, 415-328-0385. That's our number. Contact us. We're here to help and to guide you through all these different changes. It's been one of the most epically busy open enrollments that we've seen in a long time. And that's because there's a lot of changes this year going into 2025 related to Medicare. And in one way or another, it impacts absolutely everyone. So we want to make sure you're up to speed and keep you going on all that good information. So today's agenda, what we plan to cover is the A, B, C's, and D's of Medicare, the Medicare basics for 2025. I presented a lot of this information in October, but we've had some updates, some finalizing on terms of premiums and costs. So we're going to share that information and make sure you're totally up to speed. Then we're going to spend some time talking about Medicare Advantage versus Medicare Supplement or Plan G or F, so to speak, paired with a drug plan. What are the differences in the plans? What are the advantages, the disadvantages, and what are the changes based on the plan type that you're with? Then we're going to talk about prescription drug coverage for 2025. Whether you buy prescription drug coverage as a standalone product that you pair with a Medigap plan, or you get it embedded in a Medicare Advantage Part C plan, there are a lot of changes to the standard design for Medicare for next year, and it's impacting how these plans are administering that benefit. So we'll talk through that, what those changes are, and what you can expect at the pharmacy and kind of going forward. And then from there, in terms of the watch list, we're going to center around some hot topics, things like the trial right and the premiums for next year for Medicare, things like reconsideration of premiums for high earners. That's where we're going to place a little bit of emphasis to make sure you're up to speed on all the hot topics going into next year. So first up, we're going to talk a little bit about original Medicare. So original Medicare is what's known as A and B. Part A, hospital, and Part B, medical. The vast majority of my clients have both original Medicare A and B because in order to get a Part C Medicare Advantage or a Medicare Supplement Part D combination of plans, A and B is kind of that price of admission. That's how you get it. You have to have and maintain your Medicare A and B to be a part of the additional coverage in the Medicare program. And Part A hospital, for most of you, you actually are not paying a monthly premium for this, not because Medicare Part A is free, but because you already paid while working. When you work 10 years or 40 quarters paying in, you don't pay again for Medicare Part A. However, when you use your original Medicare Part A, there are some costs associated with that. And those costs tend to go up every single year. Now, you're a bit sheltered from seeing those increases because if you're on a Medicare Advantage plan, you're just paying set specific copays for Medicare Part A benefits. And if you're on a Medigap plan, your supplement is actually covering the gaps in original Medicare. But what's important to know is there are changes to this, and that impacts the cost you pay. It impacts the benefits that you're able to receive from your existing plans. So some of the changes for next year include an increase to the inpatient deductible. The first minute deductible in the hospital under Medicare Part A is going up to $1,676. Thank goodness you've got coverage for that. And if you're in the hospital for a lengthy stay, which believe it or not does happen, starting at day 61, the copay for hospital days are $419 per day. And if you had to be there more than 90 days in a row, starting at day 91, it would be all the way up to $838 per day. Really expensive. A lot of people are surprised to know that under original Medicare, you can actually run out of room and board covered in the hospital starting at day 151. Most of the Medicare Advantage plans cover you unlimited in the hospital. You may have some daily co-insurance. And the Medigap plans give you an additional 365 lifetime reserve days, which would mean you'd have to be in the hospital 515 days in a row to actually run out of hospital coverage with a Medigap plan. So you've made good decisions for your healthcare, having something to fill the gaps in original Medicare Part A. Also, under the Medicare Part A umbrella, there's skilled nursing facility care. This is designed to be transitional from hospital to home. Oftentimes, you'll go to skilled rehab where you're getting 24/7 care while you're recovering. Days 1 through 20 are covered by original Medicare 100%, but you are covered longer than that. And beginning at day 21 through 100, it's actually going up to $209.50 per day. Some of the Medicare Advantage plans out there reduce that amount. The Medigap plans like Plan G or F eliminate that daily co-insurance for days 21 through 100. So the coverages you have are helping to fill the gaps in what original Medicare doesn't cover. It's important to note that under original Medicare, if you go over 100 days or if your level of care drops below a skilled level, original Medicare is no longer going to pay for that, nor would your Advantage plans or your Medigap plans. So that's considered what's called long-term care, which is a separate type of policy that's not offered through your Medicare program. So it's just important to have a plan for that and make sure you understand that. Medicare Part B is the other half of original Medicare, and it stands for Part B medical insurance. And this is talk about everything with the word physician, your doctor's care, emergency room, ambulance, physical speech occupational therapy, things like durable medical equipment or MRIs, all Medicare Part B. Super important coverage to have. And Medicare Part B does carry a premium. For most of you, you're paying what's called standard premiums for Medicare Part B. The standard premium for Part B is going up effective January from $174.70 per person per month to $185 per person per month. Now, if you're drawing Social Security, they're going to automatically deduct that from your Social Security check. And if you're not, they typically bill quarterly for that. Now, some of you have help from the state and have a state program that helps you to pay for that $185. You probably have low income and low assets if you're having a program like that. On the other hand, some of you are assessed something called IRMAA, which stands for Income Related Monthly Adjustment Amount. Medicare has released their IRMAA figures for 2025. I'm attaching them to the message that I sent out to you today so you can see exactly what those costs look like. And if your income for 2023 was greater than $106,000 as an individual, or greater than $112,000 or $212,000 as a married couple, you're being assessed one of these IRMAAs. And that can be significantly more money for your Medicare based on your prior income. Now, there is a reconsideration process that's outlined in the email that I've sent to you, and we'll talk about it a little bit later in Hot Topics. It's possible to get your premiums reduced based on your current income level if you have a qualifying reason. Also, under Medicare Part B, there are gaps. And one of the most common gaps is the Medicare Part B as in boy deductible. Fortunately, it's pretty small, but it is going up for next year from $240 to $257. For those of you who are on Plan F, like Fantastic, you continue to pay no deductible. And you're on Plan F because that plan was available to people who had Medicare prior to 2020. So you're on that plan, it continues to have no deductible, and you're sheltered from this increase in cost. For those of you who are on Plan N or G, you have a Medicare supplement plan on N or G, you do have to pay the deductible, and this means a $17 increase out of your pocket before you access other benefits for 2025. So that's a bit of a jump. And for those of you who have a Medicare Advantage Part C, the good news is the Part B deductible is eliminated and you simply pay the copays associated with the plan that you've chosen. Also under Medicare Part B, there's a 20% coinsurance with no ceiling. And I think what this does is it reinforces your decision to either have an Advantage plan or a MedSup and D to insure against paying that 20%, which could be catastrophic in terms of cost if you didn't have the additional coverage. Also under Medicare Part B, if you're in a situation where you see a doctor that takes Medicare but doesn't accept the reduced pay schedule, it's possible that a balance bill would be created. If a balance bill is created, that's called excess charges, and that bill is passed on to you unless you have a supplement plan like F or G that covers it, or you're on an advantage plan where it doesn't exist, right? Because you just have your copays with that specific kind of coverage. The other big thing with original Medicare, as you probably know, is prescription drug coverage is not included. So you have to buy either a standalone prescription drug plan that you pair with your Medigap, or you get prescription drug coverage embedded in your Medicare Advantage Part C plan. So you don't buy it directly from Medicare, and it's not part of the original Medicare program. Also, original Medicare isn't going to cover things like dental, routine hearing exams and hearing aids, routine eye exams and glasses. You're on your own for those benefits. On Advantage plans, often they'll embed those extras to entice you to enroll. And if you're on a Medicare supplement, if you want these additional benefits, you usually have to add them on an a la carte basis and pay extra for those. So, when we talk about Medicare Advantage Part C versus Medicare Supplement or Medigap synonyms plus a drug plan, it's two distinct different paths that you can go down to cover the gaps in original Medicare A and B. Some of you have chosen Medicare Advantage or Part C. Now, depending on where you live, there's many different choices available for Medicare Advantage Part C and many different carriers, many different companies. Not everybody on the call or that's listening in is going to be on the same exact plan. But what Medicare Advantage Plans Part C have in common is every single company that offers one of these has a contract with Medicare. And for each person who enrolls, for all of you who've enrolled in a Medicare Advantage Part C, when you signed up, you agreed to assign your Medicare benefits over to the private insurance company. So you're not using your red, white, and blue A and B card. You're using just your Medicare Advantage Part C card. The Medicare program is actually paying that Part C organization, that private company, money every single month for you to be a part of that program. And then that carrier takes that money that they receive and they go out and negotiate rates with doctors and hospitals and other ancillary providers to deliver a care experience to you. When you assign your Medicare over, you give up a bit of your flexibility. You're agreeing to use a specific network of doctors. On a Medicare Advantage PPO, it means you can see doctors, anyone in the PPO network, and use your health plan carrier card for those services. You're going to pay a specific amount of copays or costs associated with in-network. On a PPO, you can also go out of network and it doesn't require referrals. But when you go out of network, you're going to share in more of the cost on a Medicare Advantage PPO. There's also several HMOs that are available across our markets. And on those plans, you're required to choose a primary care physician or main doctor as your physician. And you're required to get a referral from the primary care doctor before you access specialty care, unless it's urgent or emergency. In California, they're going to put another layer on that and say you have to go within a specific network of doctors and get your referrals through that network of physicians as well. So it's a bit more restrictive, but for a lot of you, you've chosen this option because it has your doctors with it. It's the same doctors you would be seeing anyways, and you get a lot of additional benefits at a low cost and get to see still the same doctors you've been with. So it works out very well for many people. The reason that the plans are so enticing is because often they have low or no monthly premiums. So you're like, wow, I see all these gaps in original Medicare. I'm paying my $185 a month, often at low or no additional cost. I'm getting a plan that covers extra benefits, things like vision, dental, hearing, and over-the-counter benefits, embeds prescription drug coverage as part of the program, and has low predictable copays with a maximum amount of pocket on spending that I can plan for the future and know that I'm not going to have a catastrophic need for my insurance. So it works great for a lot of people. Like I said, the plans that are available in each area are different. So what's in San Francisco County is different than what's in San Luis Obispo, is different than what's in Los Angeles or New York City. There's different plan options available based on where you live. And so in order to be eligible for these programs, you have to have A and B, and the plan must be available in your service area. As long as it is, and as long as you have a valid election period to enroll, you're guaranteed acceptance into the program. Every year, you have an opportunity to add or change to a Medicare Advantage plan. It's called the annual election period. It runs October 15th to December 7th. We just wrapped up that period. And any changes made during that time are effective January 1st. It's very easy to add a Medicare Advantage Part C or switch between them every single year. For those of you who are on a Medicare Advantage plan as of December 31st, you do get an additional election period after the first of the year. It's called the OEP, or the Open Enrollment Period. It runs January 1st through March 31st, and that's a one-time opportunity to change again, either to an alternate Medicare Advantage plan or back to original Medicare. So that's a great time to try on your plan, make sure it's working for you, and you're able to access the care and benefits that you need. Now, for those of you who've chosen Medicare Advantage, you're in good company. 51% of people nationwide on Medicare going into 2025 are on a Medicare Advantage plan. And like many of you, 60% of those are on a plan with no premium at all. So it's a nice type of option for people who are able to see the doctors they want to see. They're able to get a low price point and share in minimal out-of-pocket cost and get some additional benefits. And those situations, when we look at those, we're looking at things like the doctors you see and the prescriptions you take to see if this is a plan that fits your needs and situation. And for many of you, it is. On the other hand, many of you have said, no, I don't want to assign my Medicare over to a private insurance company. I want to be able to go flexibly to any doctor I want that takes Medicare. I don't want to have to get referrals. And if that's you, you've chosen a Medigap plan, either a plan G for great, an F for fantastic, possibly an N for Nancy, right? So you've gone with a Medigap plan. And the reason Medigap plans are popular with a lot of my clients is they give you flexibility to choose any doctor you want that takes Medicare. You don't have to get referrals. It allows you to see doctors across county lines and in different networks. You don't have to worry about special authorizations. As long as they take Medicare, you have access to them with your red, white, and blue Medicare card and your Medicare supplement card. So you've got full coverage and you're able to choose and select and self-direct your care to where you want to go. There's also very low out-of-pocket costs when you use these plans. If you have plan F for fantastic, you're actually covered 100% for Medicare covered benefits. The deductibles are covered, the co-insurance, the excess charges. If you're on a plan G for great, your out-of-pocket cost for Medicare covered benefits is limited to that Medicare Part B as in boy deductible, the $257 out of pocket. So very low out-of-pocket costs when you use it, very flexible. So why doesn't absolutely everybody enroll in this type of plan? Well, it's more expensive. There's higher premiums both at the time of enrollment when you turn 65 or when you're new to Medicare, and they keep going up every single year. They can vary based on where you live, and it can be quite expensive. The other thing is prescription drug coverage is not included with the plan. So to get Part D, you have to buy a separate standalone policy. And those costs have gone up quite a bit on prescription drug plans. So you're pairing a drug plan with the Medigap. It's an additional expense and it creates a bigger overall price tag for your monthly benefits. The other thing about Medicare supplement plans is once you're on them, they're guaranteed renewable no matter where you live. You keep paying the premium, you can keep your Medicare supplement and decombination of plans and you're good to go. However, depending on your state, Medicare supplement or Medigap insurance coverage is not always a guaranteed acceptance situation. For instance, in California, if you buy your Medigap plan when you're new to Medicare or you have a special election window, you've got guaranteed acceptance. But if you wanted to add it later, say 5 years down the road, you might have to go through a health questionnaire and medical underwriting, and the companies don't have to say yes. On the other hand, some states are guaranteed issue states. New York is a good example where year-round, you can enroll in the plans, guaranteed acceptance, but it drives the premium costs up in states like New York. So that's something to contend with. One thing to be careful about is sometimes people will say, well, I want to go to that Part C plan because it's low cost and I want to do that. And if I need it, I'll switch over to Medigap. You have to be careful about that because it's possible that the plans would not accept you if you tried to make that change. There's some exceptions and we'll talk about that. But generally speaking, you don't want to get too dicey. You want to go with the option that makes sense for your needs and situation long term. Now, a lot of people have been asking me, well, why are things changing? What's going on? And why are costs going up? Why is my prescription drug plan now adding a deductible where I didn't have one before, or taking my prescription off the drug list, or increasing my coinsurance for that particular medication? And it all has to do with what's going on with Medicare's standard design for prescription drug coverage. You may or may not be aware, but Medicare has always had a standard design for prescription drug coverage ever since Part D came out in 2006. And every year they adjusted a little bit and add some changes to it. So, what you're looking at here is the standard design for prescription drug coverage for 2024. And we already had a big change this year in that for the first time ever, we had an $8,000 max out of pocket on prescription drug costs. In 2023, there was actually no limit to what a Medicare beneficiary would pay for prescriptions. Moving to an $8,000 max out of pocket was actually a pretty significant improvement for 2024. Now, some of you are saying, well, that didn't affect my day. I only take a couple of low cost generics. I don't take a lot of medication. I didn't notice that. But this actually represented a pretty significant improvement in the Part D program. Then in comes 2025, and it's the second phase of something called the Inflation Reduction Act, or the IRA. And we're seeing even more significant changes to Part D, significant improvements going into 2025. The biggest thing is the coverage gap has been eliminated. In the past, they used to call it the donut hole, then they changed to the coverage gap and reduced it to a percentage basis of 25%. But anybody who's out there taking brand names knows that by the third or fourth quarter of the year, suddenly you went from paying a copay to a 25% coinsurance. So for those of you who've experienced it, you know exactly what that coverage gap is, and the elimination marks a big improvement for Medicare beneficiaries. The other thing that is sort of obsolete now is there used to be kind of a bank account where you paid your copays for prescriptions up to about $5,000 worth of coverage. And then if your retail cost exceeded that amount, that's what triggered you going into the gap. So that's not really relevant into Morrow's world of going into Medicare Part D. At any rate, let's dig a little deeper. So, for many of you, if you've been on a Medicare Advantage plan, you've never paid a deductible for Part D. So, even though it was there in Medicare's standard design, a lot of the Advantage plans actually waive that deductible to entice you to enroll. For those of you who've been on standalone Part D plans, if you've been on a low cost plan, you probably have this deductible at least applying to brand name medications, but maybe not your low cost generics. In 2025, the standard deductible is going up from $545 to $590, and more plans than ever before are including a deductible for Medicare Part D. So some of your Medicare Advantage plans that never had a deductible are introducing it, particularly on tiers 3, 4, and 5, which are your typical brand name drugs. And on a lot of the prescription drug plans that you have out there, we've seen increases even on high cost plans, introducing a deductible on most of the programs. You have to pay generally in the neighborhood of $100 a month or more to get a plan on standalone drug basis that has no deductible at all. So more and more plans are saying, hey, we didn't have a deductible before, but now to help pay for that $2,000 max out of pocket, we're introducing a bit more of a deductible, and that's going to affect more people. So even if you're sitting there thinking, well, I didn't take a lot of expensive brand names, why do I have to pay the deductible? It's all for the greater good of putting together a plan that is going to cover you the most kind of down the road. Now, the big catalyst for all this improvement is having a maximum out of pocket of $2,000. And if your true out of pocket spending reaches $2,000 out of your own pocket, it becomes a MOOP or a max out of pocket, and you don't pay anything additional for the year. This is a huge improvement. Remember, this year was $8,000. Last year, there was no limit to what a Medicare beneficiary would pay. So a $2,000 ceiling is really good and helps for predictability down the road. You know you're going to be protected even if it doesn't affect you right now. So it's a big deal. It marks a big improvement to the Part D prescription drug program, whether you're getting it embedded in an Advantage plan or on a standalone basis. Now, what goes towards the $2,000 does not include any premiums that you pay monthly. It only includes medications that are covered by Part D. So if you're buying over-the-counter things or you're getting your medications through coupons or other sources, it's not going to count towards your true out-of-pocket cost. What does count is a deductible. So if you have to pay the $590 or part of it, that's going to go towards the $2,000. Any co-insurance you pay for your medications and any co-pays for covered medications. That's what accounts towards the true out-of-pocket cost and gets you to that maximum out-of-pocket ceiling. Now, I will say that sometimes people are getting to the maximum out-of-pocket without spending a full $2,000. And that's because of how the $2,000 is calculated. Depending on the plan you're on, whether it's a Medicare Advantage plan or a standalone Part D, sometimes you're able to get credit for the improvements to Medicare standard design. So for instance, if you're on a plan that waives the deductible or on a plan that has a much better than 25% co-insurance for the brand names, often that can help give you credit towards your $2,000 and actually accelerate you hitting that max a little sooner than actually spending that much. Now, the only way to identify that exact amount is to have a plan review. Majority of you did have plan reviews during open enrollment, particularly if you had changes to your medications or brand name prescriptions and you wanted to see the impact of that. And I saw many, many people who had a huge improvement in their drug costs. And then I saw some situations where it actually created more of an expense because they moved from paying a co-insurance to or a copay to a co-insurance for prescriptions, or some of you experienced your drugs being removed from the drug list, that type of thing. We even saw a couple of plans exit the service area, and we had to find new options for people who were affected in that way. The amazing part of this, I mean, for some of you, I've seen the dramatic improvements, people going from 4 or 5,000 out of pocket last year to a max of 2,000 this year. That is a huge improvement for so many people. If you're sitting there thinking that did not help me, right? It's just going to give you stability for the long run, right? You can plan for that. You can set aside that money in case you have a bad year that you know you're going to be covered for your prescription drug needs. So all in, it's a good story, but it definitely affected the plans and their stability and what they were able to offer for this year. Now, a few hot topics I wanted to update you on and make sure you're aware of. Number one is something called trial right. So a lot of you said, hey, my prescription drug cost is going up so much this year and my Medicare supplement premiums are going up. I want to try Medicare Advantage. And for those of you who are trying Medicare Advantage for the first time this year, you're eligible for something called the trial right. Basically, what that means is if you are kind of fed up with your price on your Med Sup and D and you'd like to try a Medicare Advantage plan for the first time, you can leave your Med Sup and D combination, try the Medicare Advantage plan, and if you don't like it for any reason and you want to go back to your old combo of plans, you can do that within 12 months, no questions asked. For those of you who made a change like this during the annual election period, rest assured that my team has set you up for a follow-up in the summer. If we haven't heard from you, to see how things are going, see if you'd like to stay with your Advantage plan or consider going back to your previous option. So we've got you covered there. If you have any questions or issues or want to look at this, we're here for you. The second hot topic that's been coming up a lot, we've been getting a lot of requests, I think everybody's going on a trip somewhere, is foreign travel. So Medicare itself does not cover you outside the United States. Most of your plans do have some coverage for foreign travel. Medicare Advantage Part C plans really vary dramatically. So if you don't know what your benefit is and you need to know, reach out to us and we'll make sure we get you that information. And if you're on a plan G or F or even an N, the benefit is the same across those plans. It's a $250 deductible for urgent and emergency coverage worldwide. And then you're covered 80% with a $50,000 lifetime maximum. Now, for anybody who needs information on foreign travel, reach out to us. Go to reservations@blackpointinsurance.com. Say, I need information on the travel benefits. We can send you your specific benefit for your plan. And we have information on something called GeoBlue, which is a product you can add. It's through the Blue Cross Blue Shield Association. And you can actually sign up for this before you leave on your trip. And it can give you enhanced travel coverage if you need it. Everybody asks us about dental. It's kind of a regular thing. It doesn't always work great for people because the dental plans can be pricey and sometimes have limited benefits. They also have limited dentists that are available with them. We do have options that we've put together for standalone dental plans that we can send out to you. So if you say, hey, send me all the dental plans you have, we can send you that information, the pricing, the benefits, the list of providers. Or if you check with your dentist and they say they work with a certain plan, we can pull that for you and see what that information looks like. So if you request that, let us know. A lot of the Medicare Advantage plans do include dental, but frequently they require you to use dentists in a certain network, which you may or may not want to do. If you're willing to, it's usually a nice enhanced benefit depending on the plan. So that's something you can consider. Some people, even on Advantage plans, buy their own dental because they have specific dentists they want to see and they want to make sure they're covered. But that's something we're willing to cover with you. Absolutely no issue. Now, a couple things on IRMAA. I really want to make sure I point this out. IRMAA stands for Income Related Monthly Adjustment. For people in 2023 whose income individually exceeded $106,000, and that's modified adjusted gross income, I've attached how it's calculated to the presentation today, to the email. And for those who, as a married couple, exceeded $212,000, you're going to be automatically assessed an IRMAA, or an income-related adjustment. And depending on how much higher the income was, that can be anywhere from $70 more per month to $500 more per month. It can be substantially more expensive. So please be aware of that. And every year, Medicare automatically recalculates. So in 2026, it's going to be based on 2024. In 2027, it's going to be based on 2025. So you need to be aware that if you have fluctuations in your income or you take out mandatory distributions, those are going to count towards your income, and it could adjust what you pay for Medicare down the road. Now, for those of you who have had a life-changing event between 23 to 25, something like retirement, a reduction of hours, a sale of a business, it's possible for your income to be reconsidered at your new level, and you can potentially eliminate the income-related adjustment for 2025. We've attached that process with the email we've sent to you. If you have any questions, please let us know. But it's definitely something to take advantage of. I have seen several examples of people going from the very highest level all the way down to standard just by filing this process. So really important that you take advantage of that and follow up right away going into next year. Finally, we've covered what I wanted to cover today. I wanted to give you a huge thank you for continuing to work with us. We appreciate each and every one of you. You have our phone number here, 415-328-0385, and our team email, reservationswithan@blackpointinsurance.com. That is the only email we would prefer that you use. We work it as a team and we can take care of you. A lot of people send us so many referrals. I can't even tell you how grateful I am for all the people that you send our direction. The other way that you could really help us is to subscribe to my YouTube channel. To do that, it's very easy to do. You just go to YouTube, you search for Black Point Insurance. There's a big picture of me there with an orange background, and just hit subscribe. And that is a big difference. It helps us grow, it helps us spread the word, and it allows me to produce the content with free of charge because it's expensive to kind of put this all together. So we really appreciate you doing that. Please subscribe to our channel, interact with what our content is there, and learn some great information. There's also a lot of good shows on there that you can really enjoy. So I just want to thank all of you as we head into the new year. I just want you to know I'm grateful for all of you. Happy holidays to you. Healthy and prosperous year to you in 2025. We are here for you if you need us, and I so appreciate your time. Thanks, everybody.